Good morning, it's Jeffrey Christian. It's just before noon in New York on December 7th. Nice chilly early winter day. I wanted to talk about a variety of topics today. My initial thought was to talk about tapering, the Fed's plans for reducing its bond purchases and possibly raising interest rates sooner than had been expected, and what that means for gold and silver. But as the last several days have progressed, there were several other topics that came up, and I was wrestling with, well, do we just sort of set them aside and ignore them, or do I just sort of run through them all? And I was thinking about it, and I realized there is sort of an overriding theme to these different topics. And tapering the Fed's policies, obviously that's extremely important and people need to know about it. But I looked at other issues, that's how I'll go through, and I've realized that while there were real subjects that ought to be dealt with, there was a tremendous amount of fear mongering among the guys who try to sell you precious metals based on fear. And we've seen and heard a lot of stuff that just isn't actually accurate. So I'm going to run through a few different topics, and they're all kind of important to precious metals investors, and they should be paid attention to. First one is interest rates. The Fed has announced that given stronger and more persistent inflation than perhaps some of them thought and expected, that they probably will be pulling back and getting out of the bond purchase market sooner rather than later. We'll wait and see if they actually can succeed in doing that. They have tried to taper before and it backfired, but I do think that the Fed learned from those earlier mistakes around 2014, 2015, 2016, and they probably will be a lot more adept at tapering their bond purchases this time around. Plus the economy is radically different from where it was back then. They also may start applying upward pressure on interest rates. Now, if you look at the 10-year bond, I have a long-term chart that goes back to 1962. And then on the right, there's a shorter term chart that's just the last 3 years, 2019, 20, and 21. And I put that in there. You know, first off, the long-term chart shows you interest rates are still at enormous, historically low levels. So there's a lot of room for interest rates to rise. You're hearing people say, well, the Fed can't raise interest rates because the entire financial complex will collapse. They can't afford to raise interest rates because of the massive debt and the interest rates that the Treasury government, the U.S. Treasury has to pay on that. And in extremis, that's true. But in reality, there is a vast gulf of what can be done before you run into the red zone. And that long-term chart sort of drives that home. And then on the short-term chart, you can see since the Fed started talking about tapering, 10-year bond yields have actually come down. They, rose earlier in the year up to about 1.6, 1.7, 1.74, came back down. Then they rose again up to about 1.64 or so, and now they're back down to about 1.34. So the interest rate market is not signaling major concerns about the tapering program. And if you look at it on a real inflation adjusted basis, we still have extremely low real inflation adjusted rates. These are 10-year bonds. If you look at the T-bill, the shorter term interest rates, they have been negative for most of the period of time, really since about 2008, 2009. But T-bonds are at very low rates adjusted for inflation. So there's still a lot of scope there. And fears of tapering may be overblown by some commentators in the market. In 2008, CPM Group worked with the Industry Council for Tangible Assets. We produced a report, I'll show you the links in a second, in conjunction with the ICTA, we produced a report on cautioning investors about self-directed IRAs holding precious metals. There are very clear rules on home storage, on holding precious metals in IRAs. And specifically what it is those precious metals, all assets in a self-directed IRA have to be held by a trust, either a bank or a non-bank trust. You cannot hold it yourself. There were, and there continue to be, a lot of people who are bending those rules. And the IRS is very vague in some ways, but they've made it clear that the material was supposed to be held by trusts. And people would bend those rules. So in 2018, and actually ICTA released this in February 22nd of 2018, CPM Group had a companion market commentary, which we released in April of 2018. But we were working on this in 2017 with them, and possibly even earlier. This is something that can cause a real problem for investors. If the IRS comes along and says you are mishandling your IRA assets, you may owe penalties, back taxes, and interest on not only that, but all of your IRA. And your entire IRA becomes taxable if you violate it with a portion of it. So it's very important that you do not hold that precious metals in your own possession. You may not have possession of that metal under the IRS. And it's very clear that you may not have possession of it, but people were selling things, oh, well, you can create an LLC and the LLC can own it and then you're not owning it. That's not the way the IRS looked at it. And so it's a real problem for investors, individual investors. IRS was standing there 2017, 2018 saying, we can come after you at any time that we want. And not only do you lose your tax protection on your precious metals, you lose your tax protection on all of your IRA assets, and you're subject to back taxes, penalties, and interest. It's a bigger issue for the precious metals industry, and we were working with ICTA because of this, because it would cast a pall over precious metals investment. Precious metals are always struggling for legitimacy in the eyes of many investors, investors who just don't feel comfortable with tangible assets. They are comfortable with stocks and bonds and things that fall under the purview of the SEC in the United States and financial market regulators elsewhere. So precious metals are always struggling for legitimacy in the eyes of a lot of investors in Europe and in North America. And a scandal like this could really cast a shadow over precious metals. And we were very much concerned about that. I bring this up because the IRS has come after at least one investor and has fined them several $100,000, and they have lost their tax advantage status of their IRA. Precious metals, these two documents from 2018 are available on CPM Group's website at those links here. So that's something to watch out for. Another thing that we've heard is, okay, we've talked repeatedly about the fact that we have record amounts of silver in market reported inventories in London and New York and in China. And we've talked about the fact that there are billions of ounces of silver in bullion form above ground, as well as a couple billion ounces in bullion coin form above ground. And we've shown you charts and data showing that there are enormous amounts of mineable reserves and reserve base yet to be mined. So the issue that we're running out of silver or that there's a silver shortage is bogus. And anybody who tells you otherwise is either mistaken or is purposefully trying to sell you precious metals based on untruths. Now it's, oh, well, silver mining production has to fall. It is inevitable that silver production is going to fall because no one is investing in copper mines. We do a lot of work on energy, what there's now calling energy metals, and we've done copper research since the 1970s. And copper is a very hot commodity right now. The price has risen very sharply, and quite frankly, CPM Group expects the price to stay high for years to come. We take our copper projections out 5 years, sometimes 10 years, sometimes 20 years. And over the next 5 years, at least, we have copper prices very high. Partly because people are looking at the electrification of transportation and other things, and they're saying we're going to need a lot of copper. So actually, you've seen about a 12% increase in copper capital expenditures across the industry this year, and you expect another 7% or so next year. These are one set of projections, 12.2. Another industry group that we look at that collects information on capital expenditures in the hard rock mining industry has an estimate of 7.8% for this year, and further increases going forward. In addition to that, copper reserves are at record levels. So there's plenty of copper to be mined, and this is just the stuff that the USGS has identified. And as I've talked about with gold and silver, there are known to be probable resources of copper in China, Western China, and Eastern Russia, and other parts of the world that have yet to really be explored yet. So copper reserves are very high. There's plenty of copper to be mined. The price is high enough that companies can now start spending money on pre-development and development of that, and the demand is likely to be high. So copper production is going to rise, and byproduct silver will rise with it. It's just not a reason to think that the world's running out of silver. I had a point that I brought up on the first page, which is Evergrande. We go back 4 months ago or 5 months ago. Evergrande is a real estate investment company in China, and it had taken on enormous amounts of debt that it couldn't really service. And as the real estate values in China declined, it couldn't service that. It has since that time defaulted on some of its loans. And again, there was this fear mongering. You know, the collapse of Evergrande, a Chinese real estate company, investment company, is going to cause a collapse of the global financial system. And we were saying, no, it's not. First off, if you put it into context, it is easily contained within the now enormous Chinese economy. And the Chinese government has enormous reserves, both within the People's Bank of China and within China Investment Corp, that it can bail it out if it needs to, and it can't lean, and it, you know, but it probably will lean on private investment firms within China first and to cooperate. And again, you know, yesterday or today, depending on your time zone, the Chinese government has in fact started to put together a program to reconcile the problems with Evergrande. So it hasn't caused the collapse of the global financial system or the dollar or anything else that it was threatening in the eyes of the fearmongers, and it probably isn't going to. So I realized when I was talking about these different topics that have come up, tapering, Evergrande's movement toward a resolution, the fact that copper capital expenditures are rising sharply and are not falling, and copper production and byproduct silver consequently, you know, and then the ICTA issue. I realized that there's a common thread. Real issues that fearmongers latch on, they take those real issues, they blow them out of proportion, and they go on the internet and they tell investors, you'd better buy precious metals from me now because look at what's coming down the road. That's all I have for today. Again, we have a lot of things coming up early next year. We're racing toward the end of 2021 right now, so that's about where it is. You can go to our website. You can get a lot of free reads. Those two articles we posted, the ICTA piece We also posted our own piece back in 2018. You can read those and other things on our website, and you can learn about who we are, what we do, how we can help you invest more wisely, and how we can help you not be quite so fearful of Hillary Clinton coming back and making you use the same bathroom as other people of the other sex. There's a lot that can be done within a world that's not collapsing, and we're here to help you. Thank you.